What's going on, YouTube? How you doing? First off, let me express something. No. How you doing? I've had such a day. My head is splitting. Wasn't as bad as it was earlier, but a headache's a headache. No one wants them. I have one, and it kind of sucks. Today is March 24th. This is Monday, 6:28 a.m. You can see it down there in the bottom right corner. I don't know why I said it, but uh taking note of what happened last video, the second trade I've taken so far, and this is while on a paper trading account, right? This is me just learning how to trade, right? Um, we traded, and at the end of that video, I display a mode of confusion. Why confusion, you might ask? Well, I wasn't paying attention. I assumed my trade idea was correct and that I followed all the building blocks to the best of their ability. I was wrong for doing that. I was also wrong for taking the trade in the first place because we had Newsday that had FOMC. FOMC is one of those folders, regardless of color, I should never have taken a trade on. I have learned my lesson, and I'll be taking it in stride. If I ever see any of those folders, regardless of the color, I am not to take a trade. Put an iron band around that. You will never see me take a trade with one of those folders. Never. Not unless. Never. Don't even try it. Nope. Second thing I wanted to cover is the building blocks that I have been working with for a while now. They work. First trade I took, it worked. I followed them to the T. We followed them to the T with the exception of one thing, and that was our liquidity was not swept. So we didn't get a confirmed reversal sign. It was a thought that paid off. I should have known better than to think it could happen twice. Because the market did exactly the same thing. It dipped down to what I thought looked like a liquidity sweep, right? Or I guess because we were in a downtrend, I was looking for a liquidity sweep on the upside. We were looking for a liquidity sweep on the upside, and sure enough, we got stopped out as a result. Because liquidity was not swept, we had imbalances, and they were swept after taking a trade. That was my mistake. Third mistake I think I've made was my psychology in the matter. Because I was actually disappointed. I was like, not panicking per se, but genuinely disappointed in what had happened before, during, and after the fact. Before, I was disappointed because, one, none of the building blocks were lining up for me, and I was making it off of what I could, and I thought that trade would actually go well. It didn't. It did in the first half. Let's get honest with ourselves. It did in the first half. We actually got one of our take profits hit. The trade idea was correct for that take profit. However, I should have sold. I should have exited the market on that take profit. And there's no way I could have known that price was going to reverse. There's just, market does as market sees fit. Where I messed up was, instead of taking that take profit when I should have, it got set, right? And then instead of thinking, oh, I need to look for another confirmation that, yes, price is going to continue moving down, I chose to stay in the market. I chose to stay in that trade for as long as I could because I thought, per the trade idea, price would continue moving down and we'd get multiple take profits hit. They weren't. So I stayed in the market for too long, and I wasn't looking at the chart when I needed to be. With that being said, today's trade is going to go very, very differently. I am 3 hours from taking a trade right now. We are 2.5 hours from market open. I wanted to put out that that was a bad trade on my part, and that I have learned my lesson from it. I understand what I did wrong and where I can improve on that. So I'm adding a couple layers of protection on myself when it comes to psychology and reading this market for what it is. Because when I was reading and actually looking at the boot camp notes from back when TJR Trades posted his very first boot camp, right? I did take notes off of that. You can see this right here. All of that was notes from 2019. 2019? It's 2025. 2022. There we go. These are all notes from 2022 when the boot camp was being released, and when it was that I was watching it. I was taking up all these notes from that. Every single one of these were from that boot camp specifically. I'm going to add a layer of protection to myself, though, going back to what I was saying before. That layer of protection is we're not going to start on the hourly or the 4-hour. We're going to start on the daily. Why? Because it shows overall trend and exactly where the price is moving, right? Because we have to keep into account. Sorry, I'm nursing a headache, and stretching kind of helps in a way. It gives us an overview as to what price is doing, where it wants to go in the long run, right? And what we're wanting to do is take a trade within that trend so as to make the best amount possible. Currently, what am I seeing? I'm seeing we had liquidity sweep, and now we are in an uptrend. Per the daily, the past couple of days now, we've been in an uptrend. Had I have seen that we were in an uptrend, this right here would not have been a loss on a trade. We would have actually made profit. And we took a short on this. Just so we're on the same page. This was a short. So about one. Yeah. This was a short trade, and we failed miserably to see that we could have taken a long and made much more money off of it. Big oof. This is on the NASDAQ. This right here was our trade that we took. Yeah. Yeah, that was the short we took. I think with all that being said, we're a little bit more prepared psychologically. I'm a little more prepared psychologically. I'm also more prepared chart-wise as to what to look for and how to identify when market is going to be the way it is. Yeah. Again, we're 2.5 hours away from market open. So let's go ahead and just do that. Let's go to our 4-hour. We were on our day. Now we're going to go to our 4-hour. Do this. We're going to do this. Boom. Eat. Good. Boom. Eat. Good. Yay. Let's see what we've got here. We had a fair value gap that was inverted. I imagine this right here is what's driving me nuts, because between these two candles right here, right, there's a gap. And that gap is very, very mean because I can't read that. Not fun. Very not fun to see that. We have a fair value gap up here, though. Boom, boom. And I'm not seeing where it could fill anything. It's not filling a breaker block. It's not filling an order block. So this right here is a fair value gap, a valid one on the 4-hour. Let's go ahead and get that marked. Again, we're 2 hours. I'm just drawing imbalances on the chart as I see them. Boom. we don't have to worry about this because liquidity was sweat right here and price took a hike. Again, this is where we were traded, right? So price took a hike there. Let's see if we can see the same thing on NASDAQ. We had that same inverse fair value gap here. We have a fair value gap here, actually. Yeah, at 1, 2, 3, fair value gap there. 1, 2. We do have a fair value gap on the NASDAQ as well. Boom. Boom. Yay. Let's go ahead and go down to our hour just to see what's happening. This is as far as we're going to go. So we're on the same page, just so we know. This is as far as we are going to go. Let's actually go up to our 4-hour and hide this from our view because we don't want to see this at the moment. Current and above, which means I can go to my 1 hour. It's disappeared. Yay. That's what I'm after. That is not the hour. That is the 1 minute. So I have the 4-hour, this. Current and above, good. This, not one tick. I gotta remember where these are. Can I favorite these? I can't. We like the daily. We like the 4-hour. We like the 1 hour. We like the 30-minute for the event we can't read off the 1 hour. We like the 5-minute. We like the 1 minute. Yay! And I have my favorite stuff here. Boom. I can cycle between both of them. Perfect. Gold. That is what I'm looking for. When that's taken care of, what am I looking for now? We are on the hourly. Boom. On both, we're on the hourly. Boom. Nope. Don't want to do that. Looking at fair value gap right here. That was not inverted. Could that have been a breaker block? Nope. I think this right here is a breaker block. And as a result of this fair value gap being right where it is, I think this fair value gap fills this breaker block, making it completely invalid. We also have a fair value gap here. It looks good the way it is, though. Like, this is a valid inverse fair value gap off of this. I see another fair value gap up here, very small one. BGR says that size does not matter when it comes to these. Any inverse or any fair value gap in general can be inverted and thus an imbalance. I don't think this one's legitimate. I don't think this one is valid anymore. Why? Because it is direct, like, you can't get any more in line with the center of this fair value gap and the top of this wick here. And price did already come down, and we did get an inverse fair value gap right here when this right here decided to close above that fair value gap right there, creating that inverse. And then, of course, we had an order block. This would have been our breaker block off of this move as well. Then price would have continued higher. So, boom, you have that being a thing. I do believe this is not credible anymore, so we're just going to delete that and ignore it for now. The general idea per the daily is that we're in an uptrend, and I can see that quite clearly on the hour. We are still in an uptrend. Hello, SMT divergence. We have a fair value gap here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Boom. Our fair value gap is different. Would have been right in there, and that is like, that's very hard to tell. From there to there. If that, can that be considered a fair value gap even still? Yes. Why? Because it's small. Very small. Again, we're not taking any trade. We're just building up to where we need to be. Technically, there are still 2 hours in London session that we've got to get through, and then New York session will be open, so it works. Not seeing much of anything else, really. Per the daily, we were technically in a retrace, moving back up. We're on a huge downtrend, but it looks like it's a retrace that we're in and actually going to be topping off. So, interesting to say the least. See what MACD says. Yeah. Not getting anything off of that. That's okay. Alright. From here, let's go to our 30. Again, we're not taking a trade. Well, what are we doing exactly? We're right now going to be marking out times because I want to know when things open, close, yada, yada, yada. You get the point. 8. We'll actually put this one at 950 because we don't want to take a trade. For that, we have to go down to the 5-minute. Ugh. Again, we are literally hours away from being able to trade. I'm not taking a trade. How many times do I have to say it? Don't even think about it. We're not making a mistake that is going to cost us big. Not happening. Let's go ahead and put one at 8, just so we've got a massive window. I think this is not going to be massive. This is legit like an hour and 50 minutes difference that we have to wait on right there. Is it 8 or is it 8:30? Let's go ahead and do this now. Let's go queue up Chrome. Let's go ahead and pull up our news tab and our time tab so we're not being stupid. Resources, news first. USD, we have PMI, we have an FOMC. Sadness. This is actual just not fun at all. Right now, at this moment, that's not fun. So we're not going to take a trade. I was not kidding about that. We are not taking a trade. Let's go ahead and do this. Get our timer out because we do want to see that. 24-hour. 16. Wrong. Sorry. 24 and 8 for that. So go ahead and minimize that. Boom. Let's go ahead and go to 4. Why am I still marking this out? What's the point? If we're not taking a trade, let's click off the video already, right? Not necessarily. Why? Well, I've got something interesting I want to do. The interesting bit is exactly why you should stay. Because I'm currently working on getting to a level where I can read this chart like the back of my hand, so that even if an FOMC decides to show up, even on a yellow folder, I'm still looking for a trade. Because even though news impacts the charts, right? Eventually that news wears off, unless it's a catalyst. Like the big bad sickness back in 2020, right? So even under those conditions, I need to be able to trade. I need to be able to read this chart and know, hey, this price is going to go here, but wait, there's news. So let's see what it does, right? I want to get good at knowing when news strikes, I'm not going to be left out in the rain. without a trade. I'd like to be able to see when I can. Let's go ahead and change the colors of this. Bring that back down to black. Boom, boom, boom. This, boom, boom, gold. Cool. So minimize this. We are on the 30-minute, by the way. Each one of these represents. Oh no, that's 5-minute. This is 30-minute. There we go. I'm about to say something don't look right here because that's way too many candles. Here's our 30-minute. We got again about an hour, 2.5 hours, something like that, before pre-market opens. And here we'll be looking for a trade. I want to get good at this. I do. Really, really, really do. Let's go ahead and swap to NASDAQ. Do the same thing here. We've already done that. Let's do this just so we're on the same page, same level of understanding, because we want to be looking at the exact same chart all the way around. All 24 hours. Boom. That works. Gold. Let's go ahead and mark session highs and lows. We got horizontal beam. We have Asian session high. Highest point Asian session got to is right here. How do we identify a high? Up, down. Boom. Highest point between the two. Right there. How do I identify a low? Lowest point. Boom. Down, up. Lowest point between the two right here. And realistically speaking, I think this one was lower. There's our low. London session. Highest point, up, down, we have not made. This is our current high at the moment. So we're going to put this right here temporarily until it forms our new low. Lowest point there, boom. That works. Yay. We don't care about Asian session high. Why? Because it was pushed up above. We do have a low to work off of, though. We do have a low per Asian session. It has not made a new low yet. That's going to be interesting to see and find out if that's going to be a thing. Let's go ahead and go back over here. How do we identify a low? Down, up, low, boom. And again, that might not be the best spot to use, so we're also going to use this. Down, up, low, boom. Yay. Down, up, low. I'm not marking these. Why? Down, up, low, because they're the most recent points where price is hit that is not within current time. These are past lows that we can use for profit, take profits if we're looking for a short. For highs, we'd have to go all the way over here. And again, this is the same downtrend in the daily time frame, and we are looking at a current uptrend on the hourly. On the daily too, like this right here, from this right here, because we broke structure, right? We broke structure on this because it was initially there for up, down, and we got stomped out right here, right? Because of this break of structure and liquidity sweep on the downside, right? We had a full-on reversal, and so end of shift, end of trend, and we got that move up. If we wanted to do the highs, let's go ahead and just mark those so we know exactly what we're looking for. We want to go across this green line here. If price wants to continue moving higher, up, down, this high here, boom. Up, down, this high here. Boom. Because it's so close to that, I'm going to straight up ignore it. Up, down, highest point, boom. And for funsies, up, down, highest point, boom. We have our highs marked, we have our lows marked. In the event we want to take a long or a short, we're kind of interested in seeing where market wants to go before we actually take action. And again, FOMC. Technically, we're not taking a trade here. What I'm going to do is I'm going to mark out everything as though I'm going to take a trade, right? I'm going to pretend to press buy. We're going to pretend to press buy. What we're going to do is we're going to look exactly where price wants to go when it comes to an FOMC. Because right now, for Chrome, for this site I'm using, this is Forex Factory that we're using. FOMC, 1:45 p.m. is when this folder is supposed to hit. We're not trading around that time. So technically, on that same note, we shouldn't have to worry about it. Why? Because we're taking a trade at 9:50 a.m. and we're leaving the market, hopefully, fingers crossed, by 10:30. We're not doing anything after that. It's one trade in the morning before news. With that being said, we also have a second one. Does it matter? No, why not? 310. The closest ones to us are PMI, Flash Manufacturing PMI, Flash Services PMI. Both of those are at 9:45. Does our note say anything about PMI? CPI, PPI, FOMC, NFP. That is what we are at. That's what we're looking at right now. That's what we're looking at. I'm not seeing anything after that. Like, I'm looking at USD. Let's go ahead and look at GPB and Euro just to see if Euro's got anything. Whole lot of PMI, whole lot of PMI, whole lot of PMI all the way through Euro, GBP, USD. We have one more GBP right before USD at 2. BOE Governor Bailey speaks. And then JPY is its own thing off at 7:50 p.m. We'll be streaming on Orbs Vault at that time. Actually, I'll be waking up at that time. We'll be streaming at Orbs Vault to 9 p.m. 9 p.m. all the way to 1 a.m. So if you're interested in that, be sure to check out Orbs Vault on YouTube. You have to type that into the search bar. The links can be found in the description of this video or the channel description. So that's the thing. Let's go ahead and minimize that. We're taking a trade before the afternoon. Technically, news should not be affecting us. Shouldn't be. There's only one set of news that should be affecting us, and that's PMI. It's just how that is. I recognize that we are currently in an uptrend. We have done nothing on the S&P. Let's go ahead and knock that out right quick. How do we identify a highest point? Up, down. Again, we have a very high right here that has not made a new low. Lowest point, down, up. Boom. Low. Good. This. Highest point, up, down. Boom. There. Lowest point. This is the hard one. Let's go ahead and grab this. Bring this over here. Boom. Lowest point. I want to say it was right there because we had a down, up. That's not how we identify those. That is not a low. Down, up. Lowest point there. I know what to look for. Yay. Cool. 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 We don't care about this high. Why? Because it was pushed past. We have a low, we have a low, we have a high. Yay! I'm getting better at it. Woo. Let's go ahead and zoom out right quick. Boom. Identify low. Dun dun. Right there. Yay. This one here. Down, up. Boom. Yay. I don't care about this. I don't know if I marked that out. Did I mark that on? I did mark that on. We had a bit of an S&T diversion, it looks like. No, we didn't. Down, up, down, up. So I marked that regardless. I'm going to put that right there. It doesn't matter. I think I'm going to delete that on this chart specifically. Let's actually delete this because it's not worth... I don't think it's worth taking. I'm wrong. We don't care about that one. If it wants to pass this, it can, but I don't think it will. Why? Because this made this an inverse fair value gap, whereas this right here is still a valid fair value gap. The context of things matter. Until price reaches this point again and clears this and makes it the inverse fair value gap that we're looking for, don't even bother with marking this low. Why? Because it's not there. I'm tempted to delete this one as well, but at the same time, the margin is fair right there. So I think I'm going to leave that the way it is. We still have a fair value gap from here down to here on this side. It works for this low. This low specifically, I'm tempted to delete as well. just because price is not going to drop from all the way up here all the way down there in a single day. I mean, this is again the 30-minute mark, and you can see the moves it made. You can see that, and you can see where we got stopped out right here. We wanted to take a short in this, and price continued to move higher. We had a small retrace in this, and it pushed past and stopped us out above this fair value gap. The triple fair value gap that I had marked out on that same video, if you want to go check that out, feel free. I might actually link that in the description, so for reference sake, there is no confusion when it comes to finding that video specifically, because I understand I am posting a lot of content in a very short span of time. I've got a bunch of small videos. Those are legitimately chopped up versions of the videos you see here. This long video. Hi, hey, what's up, hello? Yeah, in the event I find something that is noteworthy, I'm going to chop it up into smaller bite-sized pieces. One, because you don't want to see an hour-long video, and two, you'd rather see a shorter video, and three, the notes are what matter. And so I'm going to have those times where I'm legit taking segments out of the video and putting them up as shorts. I haven't done that yet. I have not made shorts off of the videos that I have made. I'm doing a lot to keep myself occupied and to attempt to make money. So if you want to support me, hit that subscribe button. Yeah, that's essentially it. Let's go ahead and mark out the highs that we had over here, because I don't think we've done that yet. We're going across the green line here. Oh wow, did we mark the highs? We did. Oh wait, no, this is the NASDAQ we did this on. So because we're marking the lows right now, the other chart, so we don't need to be bothering this chart anymore. I think this chart works. Hello, 7 chart time. We are charting at the moment. Oh wait, that's as future can get. Gold. That's staying there. I believe that is our hour-and-a-half mark, if I'm not mistaken. Let's go ahead and go to S&P, because we are not done with that. We're still marking those. Down, up, low, boom. That works. Again, this low does not matter, because it was what made this an inverse fair value gap to begin with. This right here did. And we still have a fair value gap on this side, so this low right here is still valid. This low is a shot in the dark because it is a low. It is the most recent low at the moment, though it was the sweep that caused the move up on the 30-minute. So yeah, that's the thing. What is this too? London session low high, Asian session high low. Let's just put all the way over here though. I think this was what we were doing right here, so I'm gonna go ahead and delete this. Two low, 3 low, 4 low, 5 low. So yeah, I think that one was weird. Okay. Across this green bar here, we want to look for highs much higher than this, so we'll start with this one here and then work our way up. Boom, boom, up, down, high there. Boom. Go ahead and up, down, high there. Boom. Let's go up, down, high there. Very small high right there. Gold, and we'll even go, yeah, I think we already did for funsies all the way up here, so up, down, highest high, most recent. Boom. This is at the top of that downtrend reversal on the daily. Up, down, we did a high there just to have it marginalized. We have a different setup, right? Up, down, high there. Gold. If we wanted to, we could have done this, but at the same time, we don't want it. Realistically speaking, I need to get used to taking care of that because this is the inverse fair value gap, and we still have fair value gaps all the way through this. That price has not hit yet. We want to get real, like, let's go and zoom way out. Try and get a compass. Can we encompass? No, we can't. Sad. It's just too far. Okay. For this downtrend, though, we've got a bunch of fair value gaps all the way through this, and we are currently in an uptrend. So we're looking for price to take out these highs. If I had to be the guesser, and I am going to be the guesser here because guess what? I'm the one trying to make money off of this. We want to see price continue higher. That's a scary notion on the 30-minute, on the daily, on the hourly. We want to see it continue higher. Why? It is our confirmation that a long position is going to be a thing. How do we know price is going to continue moving higher? Well, let's take a look. Continuation signs per the notes. Let's go ahead and get that there. Boom, boom. Continuation confluences are fair value gaps. Breaker blocks, order blocks, and equilibrium. Right? Technically, if we want to get real in depth with this, let's go ahead and take a look at the date. Take this up to the daily. Boom, daily. Yay. Go and zoom out all the way. Boom. Yay. So, first sign of confluence that we're looking at, fair value gaps. We're looking specifically for fair value gaps. We're on the daily at the moment. This is an inverse fair value gap. This right here is a fair value gap, right here. All the way up there. Is price going to get all the way up there? Not really. Why? Because, well, not in a day, per se. Again, we're trading in the trend. We're looking for price to continue moving higher to hit these highs, specifically. So, I guess our best option at this point is to zoom out on the 4-hour. Because, again, we have downtrend on the daily, uptrend on the daily, right? We do have a valid fair value gap right there. We have an inverse fair value gap here. We've got several. We got this right here. Not that right there. Nope, not that right there. Not that right there. Fair value gap here. That was inverted just now. Fair value gap there. Inverted on that. We still have a fair value gap up here. We have an imbalance on the daily right here. So I think price is going to continue moving higher. On the daily, we need to go back to, because per this fair value gap, we're looking for now a breaker block. What's a breaker block? A failed retracement. Shows imbalance in the market, shows that there is a lack of, in this case, buy orders. And as a result, price is going to want to follow suit up into that. I believe we have this right here is our breaker block on the daily. If I had to say, this green candle right here is our breaker block. It's the failed retrace. And as a result, we're looking for a second continuation order block. Order blocks are the moves that cause liquidity sweeps. In this instance specifically, this would not be considered a breaker block, in my opinion. This would be considered the order block. Why? Because we had liquidity sweep on this candle here. This leg up caused liquidity sweep down, which would mean our breaker block would have to be formed up here. Because again, it's a failed retracement. Right? This showed we didn't have enough buy orders in the market. So market makers had to fill their buy orders with the resting sell orders, causing the order block. The order block legit said, hey, we're going to move in the opposite direction, because market makers recognized that, hey, we weren't getting enough buy orders. So they filled it with the resting buyers up here to force price lower, swept the liquidity, push price higher. And last but not least, and this is in the event we can't identify a breaker block or an order block, our equilibrium. This is best used on the small time frames. This is our equilibrium though, for the daily. This is the daily. This is the daily. This is not to be used as confluence on the day, though it can be used as confluence on the daily. We want to make sure We are using this correctly. This is stupid because it's not the most recent high and low. What? Why? How can you say that? This is meant to be used between sessions. Right? Sessions. We are at the start of a week. We're using legit the past 2, maybe 3 weeks in this one gist. So this is completely unjustified. I'm working off the most recent high and the most recent low per the past 3 weeks. Per the past 3 weeks, we have this legit time frame to work in. I'm forecasting what might happen. Potentially. What I think is going to happen per the daily, I think we are going to continue moving down. Why? Because this is a retrace right here. This is a retrace where on a leg down, we cleared a liquidity sweep, a fair value gap here. We cleared an imbalance, which means price is going to move up, clear this, and again, continue to move down. Where? To potentially clear another fair value gap. Possibly this one. Possibly this one. That's a big fair value gap. Possibly this one. There are 1, 2, 3 fair value gaps in there that made an inverse fair value gap off of this move down here. So I think price is going to continue moving down over the next couple of days. Over the next couple of days, comment section, that is what I just said. We want to get real specific with it. Let's go ahead and do this right here. Because how do you identify a high? Up, down. Most recent high. Boom. And this is a target high that we're working off of. Here's the most recent low. Boom. Technically, we are currently in equilibrium. This right here is price at a premium, which means we could be looking at a potential sell here. And to go short, price continue moving down. This is the top of the move, right? We'd be looking for a break of structure of this uptrend, which means it would need to form a new low, and it would need to form a lower high. Once it forms that, we have a confirmed break of structure. Price is going to continue going down. At which point, we'll wait for a retrace back up here, sweep liquidity, enter a sell position, and watch it continue to fall. After building the appropriate number of building blocks among the current time frame in the shortest span we've got. This is the goal. To get good at reading the market before it gets crazy. I don't think this is valid. Because we marked these here and called this okay. Did we do the same thing on this? We did the exact same thing. I marked all the way up here and a little bit down there. This is unjustified. Because the initial idea was that prices were going to move higher because we did, in fact, have a break of structure. Well, if we haven't had a break of structure, we're about to. If we get a close above this high right here. Up, down, high, boom. That candle would need to close above this. And that's legit today. Today's candle would need to close above that day's candle right there. Last Friday, 3 Fridays ago, 3 weeks ago, it would need to close above that candle. That would be our confirmed break of structure. We're going to continue moving up. Or actually, because the break of structure is confirmation of a reversal. Because we did have a liquidity sweep down here, right? As a result, price is going to move higher. This would confirm, this candle right here being closed above would confirm this liquidity sweep. So, price was going to move higher. How high? No idea. We've got these 4 to work with. I'm not tempted to go higher. I'm not going to make that mistake a second time. I think this right here is worthwhile and within reason, considering this is like the past 2 weeks versus this. So, yeah. Let's go ahead and bring it back down to the 1 hour. Boom. Because now we are working with recent time, which is this right here. We're currently on the NASDAQ. Let's go ahead and head over to the S&P. Whee! Gold. Right there, gold. Perfect. Seems our high for the most recent has been broke. Bring that there. Was it the same? It's not the same. We did not break the high. Do you guys see this, chat? We have a candle wick right there that formed a higher high on the S&P. But we do not have that same wick on the NASDAQ. I am struggling, I guess. Can I say that? I can say I'm struggling with identifying the SMT. Like, SMT is when one chart lags behind the other. But which one, how do you determine which chart lags behind the other when you spot the difference? Usually it's through prior building blocks, or at least that's what I've picked up from TGR trades. So let's identify recent blocks. We have a block here. We actually have two blocks. We have two fair value gaps right here. One and then two right there, right? Fair value gaps, what are they? They're continuation signs. The price is going to continue moving in the direction they're moving, right? We have fair value gap. We do not have a fair value gap here. S&T divergence. We have a fair value gap and a big one here compared to it. This is like legit the same candle, like 1, 2, 3 as 1, 2, 3. This fair value gap is present, so price is going to continue moving higher. I think NASDAQ is lagging behind the S&P. Why? Because NASDAQ is saying we want price to move lower, while the S&P is sticking with the building block that is continuation, right? The price is going to move higher, or moving higher. Again, though, under other confluences, on the daily specifically, speaking solely on the daily, we are in an uptrend. Assuming today's block closes above a high made earlier, 2 weeks, 3 weeks ago. If we close above that high, we are in an uptrend. If it does not close above that high, we are in a downtrend. So what am I looking for specifically? I'm looking for price to move higher. 2 bars, 1, 2. If it can move between these 2 bars before it gets to here, which I know that is an ask. I know that's pushing my luck. How can I ask that? You don't ask the market to do anything. You're not in control of the market. How dare you think you can control the market? You're right. This is my guess. This is my hope. This is my wish. In the event we do not see a higher high before pre-market open, or even before we start on our trading day, because again, we don't take trades until 9:50. This white gray line right here, right? We don't take trades up until that point. We either get in there and we know what we're going to trade, which I see an imbalance on the most recent time frame. And so I honestly think price might actually continue moving lower. I think. Equilibrium can confirm this. Most recent low. This right here. Boom. Most recent high. Boom. Here. Are we within equilibrium? No. No, we are not. That is the wrong tool. That is a rectangle and not a Gann box. Most recent low. Most recent high. Boom. We are nowhere near equilibrium, and price is just going up and up and up. So what do I think is going to happen? I think price is going to continue in its direction, going up and up and up. The Gann box is used to confirm a reversal, which means we would have to be in equilibrium to spot said reversal, to confirm that yes, price is going to, yes, be reversed or continue in its direction. So I think price is going to continue up. I think it is. If not, then I know that the Gann box is where it's supposed to be. It's supposed to confirm that reversal, and so I'm missing, which I'm thinking this right here is technically an attempt at reversal, if I'm not mistaken. Why? Because technically we had a liquidity sweep. We had one low here, We had another low here. This low swept that low. Reversal. Boom. What is our next step on the without scaling down? Let's see what price is going to do on a high time frame just to see what we can expect from a lower time frame. Granted, they are different. There is a lot more highs and lows in the lower than there is a higher time frame. First spotting a reversal or price hitting a key level within our time trade, right? We have to scale down to the 5-minute time frame, wait for confirmation via a break of structure, inverse fair value gap, or an S&T divergence. Technically, we're getting that now on the high time frame. We have an S&T divergence. This candle's going up, boom. This candle's going down, boom. There's our confirmation. From there, we wait for a 5-minute continuation confluence, fair value gap, breaker block, order block, or equilibrium to be set. We have not seen break of structure. We don't know that price is going to continue. So, per that note on the most recent time frame, and I'm going to use this to the best of my ability, I am looking for a break of structure. I am looking for this fair value gap to be cleared on both charts. Both charts, that fair value gap, let's go ahead and mark it on this chart too, just so we're on the same page. Wouldn't want you guys getting confused on me. Boom. Boom, right there. Assuming this fair value gap on both charts is cleared, we have ourselves an inverse fair value gap, which means the candles close below it, right? That is our confirmation, that's our confluence that price is going to, what? Continue. Right? We're also looking for a breaker block, or if this isn't cleared, we're looking for a breaker block, an order block, or the equilibrium, and that would be taken off of the most recent low for the session and the most recent high. Talking about a high time frame here, using the same confluences we use on a low time frame to identify where price is going to go, not for the day. Actually, yeah, where price is going to go for the day, because we are on the 1 hour at the moment, not the 5 minute. Anyway, how do I identify a breaker block? Look for retracements. How do we spot a retracement in a uptrend? It's typically the down candle. That is our retracement there, because guess what? Price has to move down to clear orders in order to go higher. So our breaker block is the failure to clear orders. I believe we have one here. This would be our breaker block because, one, it not only left a fair value gap here, but it didn't clear either side of this. So as a result, that is our breaker block. A disrespected breaker block is when price has a wick above it. When it's disrespected, the continuation sign is no longer valid, and as a result, we can expect price to move down. And that's where things get complicated, because we still have a fair value gap here, right? That was our on the 5-minute continuation, but we're using this for the hourly. This is the continuation confluence that we need, is this one fair value gap right here, right? But that being the case, now we're looking for what's called an order block. An order block is the leg up in an uptrend that's going to cause a liquidity sweep down, right? We're looking at that point in time for this right here to get swept, and it doesn't have to close below it. The wick just has to cross it. So long as the wick crosses it, that's a valid liquidity sweep. There's our continuation for price to move higher. In the event we can't find a fair value gap, breaker block, order block, or the liquidity sweep that we're looking for within our continuation confluences, equilibrium is our best bet because, again, we can't identify anything else. So equilibrium would go from our most recent low to our most recent high, at which point we can actually move this now, because this is now most recent high per that. Let's go ahead and see if this is still lagging behind. It's not anymore. The S&T divergence is no longer there. Price has moved higher, which is good. That is our good sign, because price means it's going to go higher. It's going to go much higher. Equilibrium would have been used if we can't find any fair value gap, breaker block, or order block. Most low to most high, wait for it to cross, or actually get within discount, buy in a long, go higher. Or if you're in a down trend and you're looking for price to be in a premium, sell when it gets in premium, go lower. That's the whole point behind an equilibrium, is when these three fail to show up. To confirm this sign of continuation, which means we have identified a fair value gap. Boom, right here. We are at that point looking for a break of structure, which signifies, one, price is going to continue higher, right? Or an inverse fair value gap, which means we are within equilibrium now. That price has cleared this, right? It is now at a discount, and at the best discount we can get to move higher. We want to wait to see a break of structure, though. We have to see a break of structure. It has to create a new low and a new lower high in order for that to be a confirmed break of structure. And then inverse fair value gap spells itself out, closure below this. That's all we're waiting on. What I think is going to happen within the next couple hours, because we are still within a couple of hours from our trade time, per our other confluences, I think price is going to go higher. Why? Because we have a fair value gap. And it confirms this reversal right here, which means price is in fact going to go higher. So, that being said, we are going to sit at this for as long as it takes. We're just going to sit here. We're going to mind our own. Actually, while you guys sit here, while I sit here, I'm going to play a game for the next 30 minutes. I'm going to wait for this candle right here to form on the hourly. Because guess what? Before we can do anything on the hourly, we have to see after this candle forms, which means this candle right here, actually, the candles between this right here, right? We have to see on the hourly price get taken out, which means either we get a key level entry here, right? Or we get, again, key level hits here. And we only have two key levels, 1, 2, right? Those are the only two we're looking for. Or, again, for price to come down in here, sweep this and or close below it, inverting it, and then from there, identifying our next available option. That is what we're going for. Right now, I think a long position is the way to go. I might very well be wrong like I was last time. Not gonna lie. So, we're gonna wait patiently. I don't know if it's raining or not. Is it supposed to be raining today? Let's see if it's supposed to be raining, chat. Comment section, not chat. You're not chat. You're not being streamed. Why are you being stupid? Stop being stupid. Go into the hole. Stay in the hole. Don't come out of it. Good grief. It is super... Oh, hello. Yeah, it is raining. Hang on. I gotta shut my window before it starts flooding. Ugh, which means it's gonna get hot here real quick. Ugh, that's unfortunate. It's supposed to be raining for the next... That's why I had a headache. I know why I have a headache now. Yep. That's why. Currently getting hit with that. That's unfortunate. That also explains the internet issues I was having earlier. I honestly thought that it was supposed to be chill like the next couple of days. Nope. Ooh, I was wrong. That's funny though. Was not expecting that. Sweet. We got some rain. Hopefully it cools down a little bit. Yeah, I think these building blocks are okay for right now. We're going to go ahead and pause recording, and I'm not going to make a mistake like I did on the Halo stream, for those of you who watch that content. Yeah, I think we're set right now. I think we're good. I've put my building blocks to the best use that I can at the moment, and I'm honestly excited to see what's going to happen. I'm excited. I don't know if you are. I am. I'm not giddy with excitement. I'm not, ooh, look at this trade I'm about to get. No, I'm using this as a very instructive, very teachative, very disciplinarian mode of mine. I need to get this absolutely correct because this is going to be my livelihood that I'm working with day in and day out. This is what I want to do. So, with that being the case, I'm going to pause the recording now and I'm going to chill while you guys skip to the next part of the video. Actually, because I'm pausing this, you guys don't have to skip. It'll just be like this. All right, we're up to the next part of the video. See, told you. Wouldn't be too long. I had my alarm go off saying that it is pre-market open time. We just hit 8 o'clock. That's pre-market open for New York session. New York Stock Exchange. We are here. Has anything changed? Kinda. Our key point kinda went way higher. Pre-market is open. However, market is not open. So we're looking at not New York, London session. Highs and lows still. With that being the case, go ahead and adjust these because these are our key levels. For every time it goes up, we have to adjust it. Once that's the case, once that has been taken care of and well identified, yada yada yada, it's just a matter of going down to our 30-minute here and actually looking and seeing what is happening and where. Again, how do you identify a high? Up, down, highest point. I imagine we're going to have a small retrace within these two candles here. That is okay. What we're looking for a sign of continuation is price to come down, not make a new low, but continue higher past that point. And again, we're only waiting for the key level to get hit within this, with that black candle, the black line, and this white line right here. If price continues higher up above that, I'm considering a long position. I'm considering a long position. That's what I'm considering. At the same time, looking at several other confluences, even amongst previous sessions and previous days. For instance, this right here. This is not an inverse fair value gap. This is a fair value gap right here. This is also a fair value gap right here. This fair value gap was not inverted. Which means price is going to be drawn further down. However, this move up is clearing the fair value gap that was left behind in previous days. Remember, we're in an uptrend on a small time frame, but on a large time frame, we've only just started this move up. In fact, I'm considering this as a retrace. We're expecting to see price hit a high and then barrel through a bunch of these lows for the high time frame. That's what we're working with. That being the case, just gonna bring this to the 30-minute. Yeah, we're still before market open. We still have maybe 3 or 4 candles before we can consider taking a trade. And let's make something perfectly clear. We have an FOMC folder on the USD. We're staying away from trading today. This is purely an instructional, like me learning firsthand what price is going to do based off what I think it's going to do, and then having FOMC introduced. And again, I don't think it's going to change much because FOMC, specifically, is happening at 1:45 p.m. There are 2 FOMCs happening. One at 1:45, the other at 3:10. Way past our zone for trading. Way past it. I'm not staying up till 3. I'm staying up till about 11 a.m. After which, I'm going to sleep. I want to see price move higher, but at the same time, I'm welcome to the thought of it moving lower. And before it moves lower, like, we're going to nail all of our confluence to a cross, to a T, to a fine-tuned, we will know what market is going to do as it happens. So in the event we were to take a trade, we'd know exactly where we would be. Just so we're on the same page, because it's FOMC and we're not taking a trade, what I'm going to do is pretend. I'm going to put a white line where we enter, horizontal. I'm going to put a red line for our stop loss, green line for our take profit. Per the two trades we did a couple days ago, right? We are down $706.41. We're down. Not up, down. This was the result of me deciding to take a trade on an FOMC day, and there was only one folder that day. There was not two. So, we're looking at considerable price action based on news at the moment. I can't think of anything to add at the moment, so yeah. See you in a jiffy. Okay. So we are now at pre-market open. As you can see, pre-market has opened. Woo. We're currently going down. How far down? Who knows? I don't think far, though. Why? Because we don't have an imbalance here. We have a minor imbalance. Like, this is a fair value gap from here down to here, right? I'm talking about this candle, this candle, this candle. On this candle, right, we have fair value gap from here down to here. It was kind of taken care of by this low here, so I imagine price is going to continue going higher. It's not an inverse fair value gap, it is a respective fair value gap. Inverse fair value gap is confirmation of a reversal. But because it was not confirmed, like this was what we thought was a liquidity sweep, a sign of reversal, because this was respected, we know price is going to continue going higher. It has not been disrespected, and as a result, continuation is confirmed. Go high. What are we looking for specifically on this? We're looking for price to hit a key level. Within where and what is our key level? Our key level is London session high, London session low, and or Asian session low. One of these three is going to get hit. Price within this black line and this white line is going to get crossed. Once it's been crossed, that's when we look for a long position. And we are going to mark that out as though we are entering, but we are not. We are not going to enter. This is a learning video. I know I've said it, paused it, said it again. This is a learning video. This is me taking notes and learning based on observation. My observation skills, in my opinion, are okay. They're not superb. They are okay, and as a result, we are going to use them to the best of my ability. I'm going to use them to the best of my ability, because I'm not confident taking a trade today, especially when we have two FOMC holders on the schedule. I want to see where price is going to go, so when we do this in practice, we are not surprised by blindsided price action. We're just not going to play it. We're not even going to try it. We aren't. We did get a break of structure for this high here. Was that a high? Yeah, that was a high. We broke structure on this candle specifically, which means price is going to continue moving higher. That is a confirmation that the liquidity sweep down low was in fact a liquidity sweep, and so we are going to continue moving higher. What am I looking for specifically? I'm looking for price to move back down in this retrace, but I'm not looking for is, actually, it'd be best to say it like this. I'm looking for equilibrium. I'm looking from this low here to this high here. I'm looking for price to come down into equilibrium. I'm looking for it to go so far down as to enter a, guess what, a discount price. So we can enter on a long. And from that, I want to see price continue moving higher. I want it to hit this key level again. However, However, let's go ahead and just... Price has to hit key level before we can use any confluences based on where it is now. Between these two candles, and even after this candle, it has to hit this or this. One of these two must be hit before we can actually use any building blocks, any forms of confluence. We've confluenced all the way up to price. We're looking for a continuation sign. What's a continuation sign? Not a reversal, not a liquidity sweep. We're looking for a continuation up. That's our goal at the moment. And so we're going to continue to look for that goal. Okay? Okay. Do we have any SMT divergences at the moment? No, but we do have something weird happening. This is our doji candle. I say doji. This is essentially a candle that says market doesn't know what it wants to do. But on this, we have a thick green candle that says price wants to continue. We want to continue moving higher. We want to keep going. So we're going to keep going higher. We might be looking at a breaker block form. Breaker block is a sign of continuation. That says price is going to move higher. Why? Because there's a lack of orders in the market, and so it can keep going higher. It's the imbalance. The imbalance is where it is a failed retrace. It's going to continue moving higher. Right? Typically, it's seen right before a liquidity sweep. So what I'm thinking is, if this is a definite breaker block, right? We get a retrace up, it touches this. I'm tempted, based on recent price action, we are in an uptrend, and we did break structure on this candle here, right? I am tempted to say we might be looking at a short position. Why? Because there are multiple confluences, multiple points much closer than this. Our imbalance is on the buying side. Though we are in an uptrend, per this trend, per how long this trend has been going for, I believe we are at the trend's end. Genuine thought, genuine guess. I don't know if it's at its end yet. How do we identify if it's at its end? Through a break of structure. What's a decent form of break of structure? A new low. Or a lower high, actually. On an uptrend, it'd be a lower high first, and then a lower low. On a downtrend, it'd be a higher low, and then a higher high. That's just how that works. So, right now, we're looking within this for a break of structure, a lower low. Lower high, sorry. Because uptrend, we're looking for a lower high. From that, I'm convinced and able to say that price is going to continue moving lower. It's going to hit this first. From this, it'll probably sweep, which is our sign of reversal. We have our breaker block here, right? Best option to see is an order block, right? It'll probably consolidate for a second down low. Order block, and then continue higher. Potential. Potential, guess, think, do. In any case, in every case, in all cases, for us to know, we're going to wait. We're going to sit on our hands. We're going to wait for one of these to get hit. Doesn't matter which one, so long as it's one of them. And it is going to get hit. If it's not getting hit, if we legit skim across it and don't even touch it, but continue moving higher, I'm not going to care. I'm not going to do anything. I'm going to say that's BS and move on. Because guess what? We're not taking any trade today. And I'm tired of thinking like that. I'm tired of looking at the chart and knowing, hey, it's supposed to cross here, and then you can take a trade based off confluences you can build throughout this time frame. It works that way. It has worked that way. It can work that way again. It has to cross one of these two. That's the goal. With that being said, be right back. Alright, comment section. I'm back. Hey, what's up? Hello. I'm looking at two charts. Boom and boom. Wow. That's different. We got a huge leg up here. That's crazy. I think on the oh my gosh, I almost called it something very different. We had a fail leg down here. I think I want to treat this as a breaker block, which is good. It's a sign of continuation. Our actual key level got hit in the time I was away. So, and that was on both charts, luckily. Key levels got hit. What are we looking for now? We have to scale down in the 5 minute. We have to look for a break of structure, inverse fair value gap, or S&T divergence. So from here, go down to 5. Go down to 5. Boom. Yeah, we're going to do this right here. Boom. We're going to do this right here. Boom. Yeet. Bam, bop, boom. Pow. Oh, anyway. Anyway. What are we looking for? We're looking for a break of structure. I believe we got a break of structure. Why? Because we're in an uptrend. We're looking for a lower low. Here's a lower low. That is a break of structure right there. NASDAQ same way. Yep, break of structure. Close below a low. Actually, I think that would be our S&T divergence right there as well. Because we didn't get a break of structure here, but we did on the other one. In either case, am I seeing this correctly? The S&P would that be considered a liquidity sweep? Because we did get a break of structure here. Sweep. Order block. Actually, these two would be the order block. This was confirmed a breaker block that I was telling you guys about a second ago. I think that right there is our breaker block. These 4 candles. These two are our order block. Sweep. I think price is going to move down on the S&P. And because it looks like NASDAQ is lagging behind the S&P, we're going to see a bit different stuff here. It is so hard to tell. It looks like the two of them closed at the exact same level. This candle here and this candle here closed at the exact same price. The only difference between the two is the wick of the candle moving further down. Let's go ahead and look at each one of these. Nice and close. We're going to get this way. We're going to do this here. Because we did sweep on both. One is dancing above it at the moment, while the other is just below it. We have an S&T divergence. From this S&T divergence, what are we looking for? We're looking for a fair value gap, breaker block, order block, or equilibrium for continuation signs. That's what we're looking for specifically. Our S&T divergence, and for the sake of knowing, I'm going to mark this because holy crap, is this such a divergence right here. From here down to there. And then on NASDAQ, from here, like, is that the same candle? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. It's the same candle. So where's our S&T? That moved up. Would it be on our low? Doesn't look like it. Not seeing any SMT, but I am 100% seeing a. I went too fast and was glad I caught myself when I did. Because I see a fair value gap here. There's a fair value gap. We have not broke structure on the 5-minute for the NASDAQ. We did break structure on S&P though, which tells me NASDAQ is lagging behind S&P because we do not have a S&T divergence. That does not matter. From the break of structure on the S&P, what are we looking for on the S&P? Fair value gap, sign of continuation. On the S&P 500, do we have fair value gap? I don't see one. What are we looking for in the event that's not there? A breaker block. A failed retrace, which I believe is that right there. We got a second cross as well. Genuine sweep of liquidity on both levels. I think price is about to plummet. Sign of reversal there. From there, yeah, NASDAQ's about to follow. So from this, we're looking for order block, break of structure. Is that order block, break of structure? No. I don't know why I keep saying that. We got a break of structure. Again, we're looking for either a fair value gap, which we might get off of this candle here. That's not a breaker block because the price has 3 wicks above it. I think we're looking at an order block. Looks like we do have S&T divergence right here. Or one line goes across, the other is actually going down. NASDAQ is saying down. S&P is now lagging behind NASDAQ. Fair value gap is still there. I believe we just, yeah, confirmed S&T divergence on this candle here. We moved down, whereas this one continued moving straight across. From that being the case, move down to here. I think we're well within reason. Because we're on that mode now, we can use per the confluence equilibrium. If we're not confident on identifying anything else, up, down, up, low, boom, to high, boom. Find best point of entry, wait for price to come down. It will be within this, look, the fair value gap here on the NASDAQ, as you can see there. Boom, low, boom, high, boom. Gold. So price needs to move back down into this, and it'll probably clear this, close below, right? Once it closes below, that's our inverse fair value gap on the 5-minute, just there, right? We just wait for it to move into equilibrium, and then we go to the 1 minute. We look for an inverse fair value gap back to the upside, or a break of structure back to the upside, and from that we can move on from there. Our telltale sign will be on the NASDAQ. We also have another fair value gap in this right here. So technically, realistically speaking, if this comes down into this fair value gap right here, I think that's also acceptable. Why? Because it's there. It is an imbalance. And technically, if it comes down into this, that's like double confirmation that yes, this is as low as it's going to go at discount without breaking structure. And from there, it's going to ramp up even higher. I want to take this trade because, and I'm going to say this nicely, I'm going to say this with the context of I lost last trade because I legit did not count for FOMC being that volatile. I also did not realize how finicky the stop loss and take profit thing was, like when you enter it, right? I need to look back into that before tomorrow, which I'll probably do tonight after I don't wake up. I'm thinking I'm going to take this trade on a long position because I want price to go higher, and I think price is going to go higher, right? We are in an uptrend, and we have not broke structure on it yet. From that point, I'm going to experiment with the entry and the exit. So across all standards, I've executed my building blocks in order. I've succeeded on a valid trade, knowing what news is. I want to see if, even with FOMC, I'm able to win a trade. Because if it is possible, then I am willing to attempt to learn this. This is on a paper trading gist, and I know it's going to be a different ballgame when we get to real trading action. I want to see where this goes. I want to know what lies ahead. I think I've executed all my building blocks in the order they needed to be in. The only real question is if I'm right or wrong on what I think trend is going to do. Is it going to continue higher or is it going to continue lower? The only real way of knowing if it continues higher is if we get an inverse fair value gap as a sign of continuation on the 5 minute. The fair value gap needs to be disrespected. If not one, both. Both is a double sign of confirmation that yes, price is going to continue higher. We are also not within our trading time at the moment. Just want to point that out there. We are currently at 9:07 a.m. We don't trade until 9:50. Just so we're on the same page. We're not there yet. And again, if this were my money, real money, talking, I wouldn't be experimenting. I wouldn't be learning. I'd be knowing and attempting to make an actual profitable trade. So far, we've hit our key level 4 times. We are now waiting on fun stuff. I think the S&P is telling us the story we need to know because it cleared. We do have an inverse. Well, we don't have an inverse for value gap. It just cleared this imbalance. So it is no longer an imbalance. Ergo, I think price is going to continue moving higher because the fair value gap was respected on the 5-minute. That is our sign of continuation. I think from this we can move down to our 1-minute on the S&P. What are we looking for on the 1-minute? Break of structure, inverse fair value gap, in that order. That is all we're looking for. As soon as it's done, I think our trade will be off of it'll be on NASDAQ, but it will be per the S&P 500's rules. Let's go down to 1-minute here. Boom. And again, we have fair value gap here. Boom. Per the general trend, we are still in an uptrend. We are not breaking structure until we go below equilibrium here. And or if we get a inverse for value gap. That is the only way we're getting that to work the way we want it to. We are currently in consolidation, it looks like. Again, though, this is within a trend. Technically, we have an inverse fair value gap right here. Just now noticing this is on the NASDAQ. That inverse fair value gap is essentially saying, yes, we are going to continue going higher, but I want to see a break of structure. You got this here. Same gist, inverse fair value gap. We could have bought right here and watched it go higher. So now they're in line with each other. We can see that. I believe that would be our break of structure. I think it'd be a valid just to buy on this, go long. Let's say we did. We broke structure on that candle right there. We're actually going to do this right here. So let's change this to green. This is where we entered here, right? Our stop loss would be just below the most recent low, our key level low, just so we're on the same page. That'd be right about there. This is our stop loss. So let's go ahead and put this right down here. Boom, boom. Let's go ahead and put this as stop loss. Red, gold. Our take profit is way up there. Let's see if we hit it, shall we? Let's put this to white so we can see where we entered. We entered there, prices continue steadily climbing again. We're going even higher. This is for a long position, just so we're on the same page. This is for a long position. We bought in, we're waiting for it to go higher, much higher. I'm not taking, I'm not going to press buy. This is me pretending to press buy for the white line. Looks like we would have missed our opportunity right about there-ish for the, actually, that is right where it wants us to. For the MACD, this candle right here was optimal entry. Why? Because it broke structure on this right here. We went higher than this most recent high. And it closed above this, resulting in moving up. I want to take a picture of this. I think I will. When I go to break it down, I'm going to take a picture of this specifically. And what I'm going to do is I'm going to create a video. I think. Maybe next video, that's what I'll do. I'll take this like image specifically after I post it. Actually, I'll find it and then just display it on that video specifically. I want to try to identify the order block in this. Not the order block, the breaker block, because there was clearly an imbalance that was fixed. And as a result, price moved higher. My guess, I'm guessing here because I'm not entirely sure. Except I know what it is supposed to be representative of, but per the market, our breaker block, I think, be this candle right here. I was going to say this candle, but it looks more like this candle. Why? Because there's an imbalance. There's not enough sell orders to continue the trend down. So this is the failure, the failure retrace on the 1 minute. As a result, we had huge block here, and we also got a large. This would be our order block, the green candle, and then the red candle right here swept this low, as well as the closure of this candle here, and as a result, price took a hike. If that's the wrong way to use that confluence, let me know. Honestly, I'm all ears for constructive criticism because it makes sense to me. I could just as easily say liquidity was swept. And be completely wrong even still. Actually, no, it would work. Actually, right here. Down, up, down, up. We had a low here. It got swept. As a result, it pushed higher. From this liquidity sweep, we had what? An order block. Or where was our breaker block? These two candles. Specifically. This was the retrace down. There wasn't enough sell orders, so price pushed higher. As a result, causing this liquidity sweep down, right? Once this was swept, price moved higher. We broke structure on that candle right there. Because it closed higher than this high. Up, down. Boom. Or actually, it would be this right here. We broke structure on this one officially for the structure. But you get the point. We broke structure per this trend down to go higher. So it did. We're before we need to trade. We are before where we need to take a look to trade. I get the feeling I'm going to get stopped out. Does that make sense? It makes sense to me. I think we're going to get stopped out. Again. It did this exact same behavior compared to last time. That white line is where we entered, right? It did the exact same thing. It danced around the white line, just hovering above it. Long enough for you to see your idea go right. So it might actually continue higher. It might continue going higher. Or in the same fashion, it might continue lower because guess what? We had the idea it's going higher. The previous trade, we thought it was going to go lower, so we took a short. We were wrong. How wrong were we? So wrong that when we entered, it danced around, hit our take profit, so down low, right? Hit our take profit, went back up to the line, danced around, and before I knew it, because it's a 10-minute delay to get these candles with the free software crap, because of exchange requirements to get real-time data for Chicago Mercantile Exchange Globex, please buy the real-time data packet. That crap. Because of that, it hit time for us to sell But because we were already dancing around this line here, our entry line, we weren't able to see far enough ahead to know, hey, we are about to get stopped out and there's nothing we can do because we're dancing around this line. As a result, we got stopped out because we couldn't see that far ahead in the future. Makes sense. But yeah, that's where we are. That's what happened last trade. And I think it's going to do it again. It'll dance around the top. It'll hit that line. It'll come back down, right? Fake out an inverse fair value gap off of this right here, right? This is a fair value gap we intend to treat like one, right? A fair value gap. It'll come down, touch this, right? And it might just continue lower. If it continues so low as to clear this fair value gap, this one, right, and invert this, I'm inclined to say price might continue higher just because, one, we're at a high. We're waiting for it to create a new low, which would be well within equilibrium here. Once it clears this, that's our continuation. It's going to go higher. Woo. However, if we had done this exact same trade and we did our stop loss right about here, had it come down this far after dancing around up here for a while, it would have more than likely stopped us out. We wouldn't be able to take a trade anymore. We wouldn't be able to exit because we lost the trade. That's just how that works. Looking at a large candle down now. There it goes. Right past the line. On both S&P and NASDAQ. Be right back. Well, would you look at that? Would you look at price go? Look at that mess. Look at it. Both of them. Both of them going down. They're going down so hard. So crispy. Did you crispy? What? Whoa. Price hit our discount on it. The S&P 500. Right? Which is our sign. Would have continued higher. However, price was not at a discount. This was just hitting equilibrium. Clearing the fair value gap, but not inverting it. Respecting it. As a result, it's going to go higher. And it did. Now it's plummeting. Kind of the same way I mentioned it was going to plummet earlier. I just danced and then plummeted, right? What I think is happening is per the trend on the daily. So just take a look at that right quick. Because I know what it looks like. Yeah. Per the daily, this is just a retrace. This is the high. So I should be expecting price to continue moving down off of making a new high. We did not sweep liquidity. This is just a retrace. Worth noting. As I say it, oh, no, never mind. There it goes. It just got through barreling way down. Spike back up. Probably going to sweep liquidity, create a newer high. No, just barely sweeped it. Barely hit it. If price wants to continue, it's going to create an inverse fair value gap. Didn't make it there. This was cleared out of that. Let's go ahead and pause and do that. So, we had equilibrium get hit on NASDAQ. Price is currently in discount on the S&P. What's that tell me? Well, have we disrespected the fair value gap? Nope. Not on this we haven't. Have we on this? Let's see. Technically, this is like the exact same one. Boom. We respected the fair value gap. It wasn't inverted. Inverse fair value gaps on the 1 minute are signs of confirmation. The price is going to continue per a liquidity sweep of high down. However, because it was not disrespected, we can assume based off of this, price is going to continue moving much, much higher. Way past this high. We are not at the time of trading. We are not there. We are waiting patiently for the time to come to trade. We are waiting. It still has time to disrespect this, too. Think about it. It has all the time in the world to disrespect that fair value gap. It's already hit it twice. I'm waiting patiently. "24 seconds for that candle to close. If that candle goes any lower, we might have a well-defined double inverse fair value gap. Just because 1, 2, right? Our second one stops there. And it's already reached past that with liquidity. We have not crossed, but we are about to on the NASDAQ. The S&P is telling the future of what NASDAQ is going to do, and look at that. Look at that. Look at that. Comment section. This is why we did not take a trade today. I wanted to see what would happen. If we did exactly as instructed, as taught on the freaking chart here, S&P is telling a stark story as to what's going to happen on the NASDAQ. We got so low. We hit that low. Is that a key point? No, it wasn't. It should have been, though. We hit that key point. We passed that key point. Huge fair value gap right there. Huge one. Inverse fair value gap and huge fair value gap right there. For that inverse, I think it's fair to say not only is price at a serious discount, but if we took a long off this, it would have been off that candle right there. And again, let's make something perfectly clear. We're not in our time to trade yet. We're not here. We can only take a trade after this time. That's legit where we are with that. If we want the best trade, we'll wait patiently. We have an inverse fair value gap on the 1 minute. We have it. Comment section. So that's what FOMC does per the market. If I ever see that, expect price to dance around key level first. It'll dance around it for a decent minute. Once I identify that price on this equilibrium has dipped past it, assume it's going to continue in the direction it's headed. Only on the confirmation that we have an inverse fair value gap do we consider price to move back up. And at this point in time, we now have to use equilibrium even more so compared to before. Why? Because unlike before, we're now encompassing all of that price action there. which means it has got to move within this. And because we now know that price, we are still in an uptrend, right? This, per the daily, is just a new low on this retrace. We are in an uptrend, and this is factual. This is gold. We're now waiting for price to continue moving much, much higher. Look at that. 3 candles after that large wick down, we have, guess what? Another inverse value gap. Price is going to continue moving higher. We are not within our time yet, so we will wait patiently. I think this video was productive. Assuming we used all the confidences the way we were supposed to, it works. It checks out. I think we did good with guessing what was going to happen based on price action current and waiting to see exactly what price would do, even though the previous trade we took before the time, this time specifically, right? We took before it. I think we did good on this specifically. We have not taken a trade. We pretended that we were off of this white line here. Man, is that different right there. S&P is telling the future of NASDAQ, and we have an inverted fair value gap on the NASDAQ as well. Price is going to continue moving back down. Huge. Is that big? Is it really that big of a... One, two, three, four, five. 1, 2, 3, 4. I think it is. Yeah, it is. S&P divergence is out the wazoo right here. NASDAQ says we want to go higher. S&P says we want to go lower. NASDAQ is telling the future of S&P. It's going to shoot way higher. How much higher? Way higher. Way, way higher. I got a question for those of you who have seen TJR Trades videos. Do you wait till this line is crossed, 950, right? Do you wait until that line's crossed to start building your building blocks, your confluences? Or do you build your blocks beforehand, like I'm doing here? So that way when you get to this time, you know what you're looking for on this, right? To get the best trade. What do you do? Comment down below what you think. If you enjoyed this video so far, there's a like button. Smash it. Tells me you like the video, tells me I ought to post more. Tells me I ought to learn more so I can further get better at this. Consider subscribing because my ideas have ran rampant for a long time now, and I have ample amount of time. However, I don't want to create mass confusion on my channels, right? I've got a good thing going on Orbs Vault, streaming at night, rendering a video, and then posting it immediately after being streamed. That's in the middle of the night, right? And then the next morning, creating a video like this and posting it to Orb Plus. I'd like to see some response, some engagement from my audience. I'd like to know, is this posting method okay? Do you prefer having those streams at night? Do you prefer having those videos in the morning? And in the event you enjoy these videos, do you prefer them in the afternoon the way you have them now? Because if you do, in any case, these videos will not change. These videos are set on a timer, and these will have their times taken care of, right? In the event you guys do not like the gaming content, the streaming and then posting of the videos, chopping them up, and then posting them as shorts as well, right? If you don't like that kind of method, tell me. Suggest something to me. Because right now I'm one person. I'm one person learning two things. First off, how to edit videos. And I'm taking that slowly right now. I've learned a lot over the time that I have edited, but I have not learned enough to say I am good at it. And that is shown greatly in the amount of videos I post and how little I just edit. I'm getting used to looking at the video from start to finish in real time and snipping out bits and pieces that I do not want nor need in that video. Okay? I'm looking into perfecting that skill, and I'm really good at it right now. I'm taking it slow and learning as I go. These videos are more cut and dry. I'm like pausing mid-recording. I'm not live streaming this, unlike most of the gaming videos I do. I am not live streaming this, so I can have a little bit more freedom when it comes to cutting out stuff I don't want, or just straight up removing the sound bits because I pause the recording and then legit just skip to the next. Let me know your honest thoughts. Quite curious to know. We have been dancing around this for a minute now. Just constantly dancing around it. Huge spike up. I do believe we're going to have... I want to say these three candles were an order block. This was liquidity sweep. We're not here yet. I think that is a new high. For the same trend, that's a new high. It is now 9:50 per real time. This is delayed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes. Because of this delay, yikes. What do I think is going to happen in this delay? Between here and here, what's going to happen? What do I think is going to happen? I think because of the sheer amount of imbalance right here, being that there are no sell orders and we have a ton of fair value gaps, what I think is going to happen is price is going to move down, and it's going to clear those fair value gaps first, right? We have an inverse fair value gap right here, right? Which is a sign of continuation. It's going to go higher on the 1 minute. Yay, went higher. But now it's got to come back down for us to get a valuable trade. Why? Because who would buy at a premium and think, oh yeah, it's going to come down and go higher? That's how you get stopped out. So what I'm thinking is it'll come down, right? We've already cleared this fair value gap. It's now inverted. We don't care about it. Yay. Now we're looking for it to come down into equilibrium. We're looking for it to come down to discount price. Once it's discounted, we press buy and go higher. Technically, we were stopped out. We were not stopped out. We came close, though. That close. And on the minute, that's like... that's bad. That right there is very bad. Especially when we entered all the way up here. And our take profits all the way up there. Unrealistic expectations is what we're working with right now. I think that broad a scope is just stupid. This has been inverted. Boom. For that inverse for value gap, we could have bought on this and just watched it go higher. But at the same time, FOMC likes playing around a lot. As you can see, we've been dancing around this for the past little while, and for the past 10 minutes, we've been dancing around this. I think I'm right in my assumption that price is going to continue moving higher because, one, we did not break structure off of the uptrend we currently have with us. I think it's going to come down, clear this equilibrium right quick just to fix this imbalance for the fair value gap. Once it's fixed, it's going to skyrocket. It's just going to keep going higher. I think we would have been stopped out, though, Had we have entered the trade when we chose to enter it right here, like on these candles up here, right? And it chose to continue going down, we would have been stopped out. We would have lost a lot. We'd have lost. Where did we go? We started from here, right? Because we said this was our inverse for value gap off the first one, and that it would continue higher. From this right here, $20,277, all the way down $20,233, $230, 270, 230. That's about $40 difference from here to there. Yeah. Yeah. That would have hurt just a little bit. Price went into discount. See that? See that comment section? But we're not there. We're not at our time to trade. We have to wait patiently. We gotta wait. That's the rule. Per the FOMC, we've already broke that rule. But we didn't actually buy in. We didn't actually sell. We didn't do anything. We're simply waiting patiently to see what price does. Let's go ahead and see what news is doing. See if anything's changed. Let's refresh this page. Hello. Things have changed. USD FOMC member Bostic speaks. Tentative USD orange folder. President Trump speaks. That's a change. And it's not got a time. It says tentative. I don't know what that means. Usually when he speaks, that's major, especially on market. FOMC member Barr speaks. Okay. Interesting. Very interesting. That explains why we're dancing around. And price is extremely indecisive. We've cleared this twice now. We've respected the fair value gap. We haven't closed below it. I think that's good of me to check that before pre-market open, after pre-market open. We're gonna get our building blocks squared away, and then from there we'll check news like a second time just to make sure. There is such a stark difference between NASDAQ and S&P. Like, the two are very similar, but if you look at the charts, they are very different. Very, 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 very different. Huge leg up, which tells me that leg down is about to be some immaculate. It's about to fire off down here. Same gist right here. We've already gone through all of that, though. Have we moved this a second time? No, we moved this one, but we didn't move this one specifically. So I think we can move that now because we have a new high. Boom. We have this right here, new low. Boom. There. Price was at a discount. It respected it, and as a result, I think price is going to continue moving higher, which means our buy option here was not the best idea. Why? Because it was too soon, too early. We chose to jump the gun. This would have been a very bad entry point because, one, we lost a lot of money. We would have been stopped out down here. I understand patience is a virtue. I need to learn to wait. Badly. I need to learn to wait. Badly. Very badly, I need to learn to wait. I think per our time to trade, price is going to dip down into this red. I think it's going to come all the way down and hit this red before it hits anything up high. We've hit our high for the key level. So per the confluences we've made so far, this is legit. However, because it's already crossed this, we don't care about this, right? It's already crossed the high. It's cleared it. What are we looking for now? Per this move up, we're looking for a huge move down. This was big, but it wasn't there. It wasn't what we wanted, right? Per this buy entry, it was. This actually cleared into equilibrium. And as a result, it was at a discount. We could have pressed buy here and it would have went higher. But we already bought at a high price. That was not smart of us. We messed up on 2 counts. We didn't wait for it to come down into discount, and we bought early. Oops. I'm glad I'm doing this video the way I am. It's showing me a lot. It's showing me what I could do to improve on looking at these charts and actually getting into the market and figuring this stuff out firsthand. I think after I wake up, the 2 hours that I've got before I stream tonight, I'm going to look into how to actually enter and exit the market per the brokerage account that I've currently got with me, because it is, in my opinion, interesting to look at, to know what's going where. Plus, I think that brokerage has an up-to-date thing. It's not delayed information like this. So when I look at that chart, I'll see exactly what I think is going to happen unfold on that chart specifically. Like, we'll map out on TradingView, but we'll go over to that brokerage and then take care of business from there. I got to make sure that brokerage is still open. I think it is. Should be. It's got to be. I think. We'll see. Anyway. See what market's going to do. We are now in the, like, per 10 minutes ago, we were already there. But per TradingView, we now see a candlestick in the white line we are supposed to be seeing a candlestick in for us to actually begin to look for a trade. And again, we're going to go till 10:30. Just to keep things simple. Keep things fair. Keep things honest with ourselves. 10:30 per the chart. So 10:40 in real time. We're going to see exactly what price does between that white marker where it is now. Actually, let's go ahead and mark this 10, just so we're on the same page. Because this is where market had us. Per 950. Boom. That red marker there, that's where TradingView had us. When real time said, oh yeah, we're actually here. We had this many candles to guess what would happen. I guessed correctly. It went down into equilibrium and it shot higher. However, it did it at a much faster rate than I thought it would. So now we're looking for, per this mode, right? Price to come back down into equilibrium. And now, because we are working off of this most recent high here, actually, how do we identify a high? Right there. Oh, that's a high. Low. Look at that. We just made a new high. We wait for price to make a high. Boom. And then from there, we mark it. Yay. Once that's the thing, equilibrium. It'll come into where we bought. And once it does, and we add a market, boom. And this is in the time we are supposed to trade, right? Once this is the thing and it comes down, this would be opportunity to buy and continue higher. If you guys enjoyed this video, as tired as it's making me, drop a like. Goes a long way. Really does. I can see the growth I've made. I can see the progress I've made. I can see a lot of stuff that I've made. In my process, in the 4 years I've spent just looking at charts and just learning this from myself and from others, learning this, I can see the growth, the growth I made, the growth I made. There we go. I've made growth. I've made progress. We're there, and we just got to take that leap. We got to take that motion and put it to action. I think the next time I do one of these videos, I'm going to do two things at once. I'm going to do the chart, right? The chart's easy. Chart work is easy. It's the psychology in it that becomes tricky. But what I'm thinking is, because I have a chart here, right? And I've been wanting to get into D&D, and I have time to do so, right? It takes my mind off of this and allows me to focus on something creative. So it's not just me investing on this channel. It's also me doing D&D stuff. I think once we have this down packed, I might take the time a day to check news and actually stick to the rule. If I see any of those folders, no. Don't even trade. Don't even look at the chart. Shut down the computer, call it a day. Instead of shutting down the computer, though, what I'm going to do is, instead of calling it a day, because I'm staying up till 10:30 regardless, I can go ahead and start working on D&D. Now that's weird. Why would I mention a game on a YouTube video that's meant to go for or plus? Or plus is my learning new skill thing. You're right. I think that's a bad thing. Good thing, bad thing? I don't know. Because D&D is based around making up scenarios, and then from there having players go about those scenarios in their own magical way. And they create interactions all on their own. You can throw interactions in to spice things up. You can send new scenarios their way, and honestly, it just makes everyone grow as people. It makes progress socially. So, what I think is best is when I stream on Wednesdays, just chatting stream, right? I will actively begin to look at some of the books I have for D&D and try and piece together a story I think would fit well with players, right? I think that's best. From there, um, it's the nuances, the stuff even I don't know about, like day trading, for instance. There could be a structure for that in D&D where we're learning this stuff, right? Wow, I never thought that would go away. It has gone away, but very different. I'm surprised. I worked so hard at my previous job that I had calluses like all over, like my fingers were made of calluses. I'm pretty sure I'm pronouncing that wrong, but you get the point. The tougher bits of skin, right? Just my hands weren't gentle. I couldn't shake someone's hand without feeling like I'm cutting into theirs, right? With my own hand. I'm just now feeling the palms of my hand for the first time in a year now, or actually a couple months. Holy crap. My hands feel fine right now. I can actually feel my hands. Yeah, I worked myself to the bone. That actually, like, feels field. It feels field. It's not bad. My hands aren't like sore, even though I've been using them constantly for the past several months now. My hands feel good. Market's showing imbalance on this candle right here. Failed retrace, not enough sell orders in the market. I think market maker's about to manipulate it on this high here. It's about to push back down into equilibrium. So I think that was a decent way of finding the precursor. Us jumping the gun and trying to buy here, right, on this down candle because we had an inverse for value gap. This is a perfect indication, I think. I think we can use this to our advantage. FOMC says we're going to dance around. That's okay. I think that's how we use it. We look for the inverse for value gap before pre-market open, right? Before that 10-minute mark where 950 goes off. Oh yeah, look for a trade. This is the level we need to look for a purchase at, right? Within 10 minutes of 950, look for this level again. Market again. Where liquidity, where we legit get a candle wick down past this line, this white line right here. Once it crosses that, or even a candle body, if this right here was the candle we're looking at, if the candle body or the wick crosses this line, mark it. Wait over here. Wait for the price to get hit a second time. Buy wick. The wick will cross this market, and from that, we'll buy onto that. This is for an uptrend, right? Wait for it to hit the equilibrium. It'll cross in wick. Buy and watch it soar higher. Put our stop loss again down here so we're in the clear. And because we know this level's been hit 1, 2, 3 times is the limit, we know it's going to go higher. And again, we could go all the way to 1040. If this price doesn't get hit again, we now know exactly what to look for. When we go to try and jump the gun, we can literally just look at the price. Look for the inverse for value gap on the 1 minute. From the building blocks we've determined from before, and then at that point, wait for it to get hit 1, 2, 3 times. Third time's the charm, press buy. Let it drop a little, soar. Because this right here, this low, went from 2247 all the way up to 338. We would have made, what, $114 off of that? We haven't hit our take profits, though, in either direction. We've just been dancing around the entry point as well as our key level. We've been dancing around them. That is the bad part about this. Everything I say falls apart as soon as you look at the key level and where we entered off of the jump. That is bad. That is extremely bad. That tells me price doesn't know what it wants to do, and as a result, it has more likely the opportunity to go in the one direction we don't want it to go in. We want it to go up, it's going to go down. We're looking for price to get hit at key level after 950. We know price has hit a key level, so we can actually scale back up. I think that's the best idea right now, is to scale back up and wait for price to hit this key level again. It has to hit either this key level or, I mean, that is the only key level it can hit because that was London high. That's what that was. It's got to hit this key level and it's got to go higher. For our confluences, it's got to go higher. We had liquidity sweep here. Price took a hike. We wanted to go even higher, though, and as a result, we needed to come back down into this zone, in this fair value gap, actually, because there's now an imbalance right there. It's got to make an inverse fair value gap on the 1 minute. That's where it'll go even higher. Break of structure as well. Let's go ahead and scale up to the 5-minute on this as well. Let's go ahead and drag this down. Boom. Yes. Gold. Good. This is good. We don't have a fair value. Well, no. I'm wrong. We have a fair value gap right here, and it's on the equilibrium. So this would actually tell us if this comes down into it, that'll be our telltale sign that yes, the S&P is going to do the same thing. We don't have a fair value gap there, but we do right here. It's not in this. Actually, if we were to mark it correctly, it is. That is within equilibrium. It's just got to come down close below it, shoot higher. I'm sleepy because I haven't slept. That's about it. We're at 10:14. Which means technically we're at 10:30 in the next 5 minutes. We'll be past the point of looking for a trade. We won't be able to find a trade. I think we did good with identifying where we ought to have hopped on board, because even the MACD down here, just take a look at it, where we marked specifically, that was early. Why? Because, well, price was down there. It was at the best it could be per discount, right? If we had bought here, we would have made a huge return on the upside. But it wouldn't have been as good as this right here, because this was our confirmation that, yes, price has met where the sell orders was losing its pressure, and as a result, we would have been guaranteed a huge return off of it. And MACD is projecting that, yes, price is going to soar even higher, so because it's not getting close to this right here. Then again, it could do something like this where it just one and then zips up past it off the next candle. I think we're in the same loop right now. I think price is going to drop into equilibrium and then shoot higher. MACD saying the same thing over here. Yep. Much higher return now. So, yeah, this is, yeah. We're going to see price action go crazy here in a second. This is cleaner. We'll stick with this. Set that and then swaps. Looking for S&T divergences. I'm not seeing any. I gotta look for S&T divergence. We already seen one. We don't need another. I know. I'm looking for myself. My confirmation. My way of knowing. I understand how this could be boring, but at the same time, it's money to be had, and therefore it's entertaining. At least to me it is. I don't know about you guys. I think we did good. I think we did very good. And we are going to stick to this rule right here. Never after 10:30. We're not going to take a trade ever after 10:30, just because it becomes a different market after that point. It's not worth taking the risk. See what NASDAQ is doing. Coming down. Same thing on both. We're a candle behind, I think. No, we're not a candle behind, but we are acting a little squirrely over there. much more volatile price action on NASDAQ. I think it is going to hit equilibrium. When it does, our idea is pretty much confirmed. It'll hit and soar after. Same gist here. Let's watch this unfold from NASDAQ. Just because we have more indicators showing where we ought to be looking at along this white line, and then from that, a reaction. We've cleared the fair value gap almost. We have cleared the fair value gap for this right here. Yep. We're looking for that inverse fair value gap on the 1 minute. That is our guarantee of continuation. That price is going to continue moving higher because it'll also hit equilibrium. That's confirmation of that continuation confluence. Am I using those building blocks correctly? It makes sense to me. It makes sense. I think I'm doing good. I think I am. S&P says no, we gonna stay high. NASDAQ says no, we gonna go low. Which way is gonna go? It's where we hit equilibrium. Comment section. Look at that. We crossed into the fair value gap zone. We have literally 20 seconds for that candle to close. If it closes where it is now, that's an inverse fair value gap. 3, 2, oh no, sorry, no, I'm sorry. 5, 2, 1, close. That is an inverse fair value gap, which means we're about to see one very large candle go much higher. This is 1020. On that candle, we would have bought in. Because not only is it closed where below inverse fair value gap, we also got it to hit the exact same level we bought in and jumped the gun before. This would have been a fire freaking trade to have right here. I don't know why this right here is the way it is, though. S&P is sleeping on the job. Just hardcore schnoozing. This is 1 minute. Let's go down to 1 minute. Boom. Yeah. Bought on that, sent much higher. That is actually wild. I think we did good. We jumped the gun, we waited, and honestly we probably would have gotten a very, very good trade out of this. I think. Then again, we have yet to see it hit any like real take profits yet, so we getting there slowly. Again, we're gonna go all the way to 1040. We're gonna wait 20 more minutes for it to go where it wants to. At 10:40 a.m. real time, I am going to call it a video. So yeah, if you guys are watching around this time, I'm going to leave all these markers right where they are. I'm going to say right here is where we ought to have bought, like right here on this candle, right? I'm going to come back to this video and I'm going to see this candle. Or this chart specifically tomorrow or tonight. I'm going to look at this. I'm going to go, yep, this right here is where we could have bought in because it was after our look for trade, right? We jumped the gun on this one and said we're going to, or actually, no, I'm sorry. We were here when market said it's time to look for a trade. But if we had waited, the same area would have gotten hit a second time. As a result, we would have been sent much higher. We jumped the gun over here. I want to use this as a precursor. I want to, when we come back into market tomorrow morning, I want to do this exact same thing, only this time tomorrow, right? Because I'm going to look at news for tomorrow. Hang on. Up next. This is for March 20. How do you look for this one? There you go. Tomorrow. USD FOMC. We have FOMC again. 2 FOMCs. Nothing else. Whole bunch of stuff for USD. Only 2 FOMCs. So I imagine it's going to be the same way we did yesterday, and it'll actually impact us this time because we have 8:40 a.m. FOMC and 9:05 a.m. FOMC. So both of those are going to affect us much sooner than it would have here because both FOMCs are happening at 2 and 3 in the afternoon, whereas tomorrow is going to be early morning. We're going to see more of this much sooner. So I think our strategy is set for Tuesday. We're going to look for this, jump the gun, right? Build up to this. Before pre-market even, well, actually, this is after pre-market open. So before the 10 or 950 mark, right? It'll be 950 real time when we have our key level not only crossed, but hit 1, 2, 3 times, right? Look for that third time. And from that, find our order block back down that leads to a liquidity sweep to the upside, right? This will lead us into our trade zone, right? And then follow the building blocks as instructed on our notes here. Build all the way down to the 1 minute after 950, after the market, this chart says 950, build on it until it hits the key level a second time. Once it hits that key level, press buy. Because one, we're already there. All the building blocks have led up to where we are now. That key level getting hit. And an inverse fair value gap on the 1 minute. Press buy on a long. Or if we see ourselves in a downtrend, short. Press sell on a short. And it'll be obvious when it's a short. It won't look like this. This is a clear uptrend. But yeah, I say let's continue all the way to 1040 real time. Let's see, the price is moving higher. It's obviously reacting off of the equilibrium it's going. So we did clear that, and we did get an inverse fair value gap. Actually, because this right here was actually cleared, right? This was not technically an inverse fair value gap. This was just a retrace down and move back up. But on the S&P, same thing. I mean, there was no imbalance, so move higher. Watch price move down and me be wrong again. Ooh, did we break structure? It looks like it. Can you tell I'm fighting sleep? I know I am. I can feel it. It's coming after me. It said, go to sleep. The pillow looks so good. Just put your head against it. Crash. I want this bread more. I want it more and more and more. I want to get good, so good at this. I don't have to worry about paying a bill again. I could just sit here, throw $10 in, come out with 1,000, get through my bills, and be done. That's what I want to do. I know that's not the reality of the fact. It's just not. But still, to get so good at something that you can confidently say, yeah, if I lose it, I don't care. I can just go get a job, pay it off, do it again, make more. That, in my opinion, that's okay. I think at that point it's worth doing that. Knowing you make more just works. Something scary I thought to mention. FOMC dances around key level, right? What about the other three? Clearly, and just so we're on the same page, so we are on the same note, the note's going to be followed. Do not trade on an FOMC day. Don't do it. It's not worth it. Don't do it. It'd be cool if we could, but don't do it. Just no. Don't even try it. Um, the other three, though, I'm quite curious to see what would happen. I'm talking about, just so we're on the same page, I'm talking about this one here, CPI, PPI. We already talked about FOMC, but NFP, right? I'm talking about those. Curious to see what exactly happens to price when it comes to those folders. FOMC, I think we've done pretty good at narrowing down what it does. It just dances. As for the other three, though, quite curious to see what would happen. Yeah, quite curious to see. So yeah, we would have had, per the MACD even, on the candle we marked, this right here, right? Per this candle, we would have been able to buy price at the best discount, with the exception of like this right here, right? Buy here, and then watch it come up above this much higher. However, it's starting to look like we're losing buying power to the upside. As you see, the strokes are getting broader and then broader. I think this one is going to turn around and go lower. Looking at what MACD has to say about this, how price action, like we were soaring a second ago, and now price is back down into this, and then it might continue lower. It might make a new low off of this, just because I'm looking at lower high, right? It could continue much, much higher, though, per the confluences we've made so far. That's what I'm looking at. For a second, I thought that said 10:52. My eyes are so dead at the moment. It's not 10:52. It is 10:32. We're gonna go ahead and close out of these, as well as diesel one. We're gonna let that do its thing, and yeah. And is this video just a roller coaster? Thinking about it, you have the interesting, you have the unfortunate, you have the unironic, and then you have just straight up, huh, boredom type deal, right? You got every color of mood you can have me be in a single day, all in one video. And that is the roller coaster that is day trading. The psychology is not there for me at the moment. I can happily say that by just the sheer me able to look back at what I've done and said this video, and it'd be like, oh yeah, he's talking about this and this and this and this and that and that and that, but wait, he just contradicted himself. Why do you do that? Because I'm not confident in the market yet. I need to build up that confidence. I need to learn from my mistakes. I need to learn from my success. I need to learn from a lot of different confluences all the way throughout this journey. I have to learn. That's on me. Got to learn a lot. Before we can begin trading with real money, we have to make 3 months of profitability. We have to be green for 3 months. We can go negative. We can go red a week. We just can't go so red that it messes up an entire month. Trading responsibly. Being accountable for our mistakes and our successes and our psychology, and knowing what we have to do and when in order to prevent a greater loss. Risk management. Get used to it. I'm talking to myself when I say this. Get used to it. I'm sticking to the rule book too. I've said it 7 times in this one video. I'm going to say it again. Stick to the rules. Don't trade FOMC. Do not trade any of those other folders. Check news before trading. Build your blocks before pre-market open. Look for a trade after 950 and never after 1030. Stick to the rules. Get ready for that risk management because it's going to come in hard. It's going to reality check the living crap out of you. It's just going to check you. You won't know it's checked you until after it's checked you. And then you'll be like, oh, fun. I'm having a day now. Am I messing myself up, chat? Comment section? Because he says to look for a trade around 950 and never after 1030. So what happens if you find a trade at 950? Right? You find a trade, you enter. Boom. You paid for a long position. Let's just say, let's use this as an example. Boom, you have this here, right? We've waited now up to here. Price has gone up to here. We've made this much money. Woo! It's actually gone right here. We've made this much money. Woo! Either way. It hasn't hit the take profit. Way up here. This is unrealistic. I know. Again, FOMC day as well. So, not very nice price action. It's not moving a lot. You're not seeing multiple key levels get hit at any given time. Right? Because we're working off of a trend where we're in an uptrend, right? But we also know it's the high of a retrace on a higher time frame. My question is, what do you do exactly? What would you do in this manner? Would you take a short thinking it's in a downtrend still? Would you take a long thinking it's about to change into an uptrend? Technically, it's already changed to an uptrend because guess what? I think we actually had a closure over here that reversed, that broke structure on a downtrend for the daily. So technically, at the moment, we're in a break of structure. We're going higher than what previous price action was at, and that was like 2 or 3 weeks ago, something like that. But that one green candle was for this break of structure to have occurred. As a result, we cleared some imbalances. The fair value gaps on that downtrend. We cleared those. So, higher movements? Does that make sense? Is that palatable, do you think? I think it is. It'd make the most sense because there are still more imbalances up high. Although those can be accounted for value gap from before, that would be the inverse for value gap, and the lower would be the fair value gaps for this right here to clear, which means that because this is the inverse for value gap of the lower half of that leg down, we could be looking at, again, the top of a move and it just to barrel back down. Price has the opportunity to do that at every low. We've made a low. We have not swept that low. We're at the high of a retrace. an official break of structure on that note would have been this higher low right here. We have, in fact, broke above that high as well. So, either price is going to continue higher and break through these within the next couple of days, which, yay, works, or it's going to completely reverse off of tomorrow's price action throughout the night and barrel back down. We'll see a new low. Maybe. I think he's going to continue higher. I think he's going to continue lower. I think a lot of things. I think it's 1040 at the moment. Looking at where we were before, if we had bought here, we probably would have gotten stopped out as soon as we reached this, or actually, we would have been stopped out down here. In either case, we found key levels, a key level to buy at, where price has been at for a minute. From this key level, had we have bought over here, we would have 100% been stopped out. So I'm thinking of using building blocks to find this key level again on a later trade, right? Tuesday, preferably. We'll find this key level again, similar key level, right? And then we'll do exactly as we did here, because we have two FOMC folders, kind of like what we had today, right? Price was dancing all over this key level. We will wait tomorrow for that key level to get hit after 950. Once it's hit, press buy. Buy off that key level there. Once that's taken care of, look for that uptrend. Wait for it to cap out. Wait for that break of structure down low. Sell. Get out of the market. Done. We've made money. Yay. Woo. How. Done. And we could wait, honestly. We could choose to wait. Because look at this. We are now at 1030. Per this market, we are at 1030. We've done what we came to do. I think this is a valid trade. If we were to buy here and then go up here, that would have been a valid trade. Let's see what Tuesday has to bring us. If you enjoyed the video, drop a like. Subscribe if you're on the new or on the comeback. Comment below if you're experienced or new. What do you think you would have done in this situation? What would you have done to improve your odds of successfully making this trade right here? I think I would have lost more money than I would have gained. I think I would have. Had we chose to wait this long beforehand, we would have 100% lost that trade. I think. For a second time, we would have lost it. Yeah, I think this was a successful video. I'll see you guys in the next one. Peace.